Gold Daily Forecast, December 14th, FXEmpire.com. The gold markets were hit again on Tuesday as the Federal Reserve's minutes didn't mention anything about quantitative easing. The weakening of the dollar would drive demand for gold as it always has, had it happened. However, the economic picture is poor overall, and we tend to think the uptrend should continue at one point or another. We currently have the $1,600 mark as a potential bottom to the support area that we are in, which we have defined as 1700 to 1600. We are looking for buying opportunities in this area, but we need to see a supportive daily candle. For example, tomorrow's candle, a hammer or something to that effect, right around $1,600 would have us very interested in buying this market. But as you can see from the daily charts, we are starting to show signs of, potential sloppy, but a potential head and shoulders at one point or another. There's different places you could draw it. For example, this would probably be the cleanest version, and that does suggest a fall even lower, perhaps to 1500. Now, while we are still bullish of the gold markets, we have to keep in mind that it is the middle of December and the volume is going to absolutely crater here in the next few days. Because of that, this market may not move much, or it may continue to fall and then kind of find support around 1500. The world's economic issues right now do bode well for gold in the long term, as people won't want to hold fiat currencies. However, since the gold markets are doing much better against other currencies, remember this one is priced in dollars, for example, priced in euros, it's still doing quite well. It suggests that maybe this is less a gold story and more a dollar strengthening story. If that's the case, it'll take a while for the old correlations to kind of calm down. The dollar and gold can rise at the same time, and in fact did for years. So knowing this, we figure that sooner or later the weak dollar, strong gold correlation may decouple a little bit, and gold just may simply be in demand because of economic uncertainty around the world and slowdowns and things like that. It can be a risk on asset, it can be a safe haven play. Now the market needs to decide if it wants to go in one of those directions with gold. We think long-term buying opportunities are coming up, but we just simply have to wait for the right candles. Currently, we are flat of gold and will remain so, may even have to until the new year. It just depends on how the liquidity and the world's situations kind of pan out between now and then. But currently, it does not look like we're going to have much of a rally between now and the end of the year. Having said that, we're content to simply wait.